Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we'll look at review questions 19, 20, and 21. Let's begin with question number 19. What are 3 ways that a business can recover capitalized expenses? A. Amortization, depletion, depreciation. B. Amortization, deductions, depletion. C. Deductions, depletion, depreciation. Or D. Amortization, deductions, depreciation. The answer is A. A business expense is either deducted or capitalized. If a cost must be capitalized, it can be recovered through amortization, depletion, or depreciation, depending on what category it falls into. Now let's take a look at review question number 20. As a new business owner, which of the following costs can a taxpayer amortize? A. Property taxes paid as a startup expense for the new business. B. The cost of removing a partner from the business. C. Advertising expenses for the opening of the business. Or D. Costs incurred while transferring assets over to a new corporation. The correct answer is C. Advertising expenses can be amortized as a startup cost as long as the expenses are paid or incurred before the business begins. Now let's take a look at review question number 21. True or false? Amortization is a method of recovering capital costs over a fixed period of time and includes costs incurred due to tangible assets only. The correct answer is false. While amortization covers tangible assets, it can also be used to recover costs for intangible assets.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.